I'm Jessica Minton for IB Times TV, talking with Mark Newton of Greywolf Execution from the floor of the New York Stock Exchange. Now, this week has been such a big week for earnings. We had Netflix, eBay yesterday after the bell. Obviously, now the big focus is on Microsoft after the bell today. What are you looking forward to with Microsoft? Because there's so much going on with what's going to happen with the CEO. What are you looking forward to most?
Well, it's interesting because their earnings path has been pretty volatile over the last year. They actually missed fairly badly back in June, but then they beat back in October. And so if you look at the combined results, they've actually beat consensus. I think they're expected to grow earnings at about 1% and revenue at about 7% for full year 2014. And I think they're expecting a little bit over 67, 68 cents in earnings this quarter, $24 billion in revenue. So it'll be interesting to see. I think a lot of people want to wait and see what they're going to do with their cash. That's the big thing. They have $80 billion in cash, almost $8 a share right now in cash, which obviously ValueAct took a position in them last year, and primarily the stock jumped. It had the majority of its outperformance. It was up about 40% in 2013. A lot of it was when it was announced that ValueAct was coming on board. They want to see how this cash is going to be unlocked. That's going to be the key, I think, as to what the stock and how it moves. That's probably not going to be announced anytime soon. They have a stable and growing enterprise business. That's obviously a good thing. Whoever becomes CEO is going to be important. They want to have their own free reign, I think, to make decisions. Stabilization of the PC business obviously has been a good sign for them as well. So there are a lot of positives, I think, with Microsoft set to grow revenues at about double the level the S&P will for this coming year. It certainly looks like a good risk reward, certainly given the fact that it's pulled back a lot over the last few weeks from the high 30s down to near $34, $35 a share.
Now, depending on what we do end up hearing from Microsoft today, where exactly do you see the stock headed in the short as well as the long term?
Near term, it's starting to look more and more like the stock can stabilize a little bit because it has had a little bit of a correction in the last couple months. So my thinking is anywhere in the low 30s is a good risk reward, at least technically, to take a look at the stock. If it gets up anywhere above its prior highs at $38, then it should have a lot of acceleration to the mid 40s, which might be premature at this time, but I think the stock has started to show a lot more signs of momentum on a weekly and monthly basis looking back over the last couple quarters. So, I think it's attractive to buy when the stock starts to accelerate, and then it gives you a good pullback to get in.
Now, after the bell, like I mentioned earlier, we did hear yesterday from Netflix and eBay, and you've talked about eBay before, how it's been rage-bound for about a year now. What do you think after these earnings, because they did both beat, where do you think eBay's headed and where do you think Netflix is headed now?
There's still a lot of discussion between Icon and the board as to what they're going to do with PayPal, and that hasn't really been decided because the head of eBay came out and publicly said, look, we're not going to do anything with PayPal. We think it's a legitimate part of the business. It's a fast grower. So, the shares have pulled back substantially from when they opened up about 12%, I think, pre-market, and they came in when the market opened and they pulled back, and so it's almost a little bit unchanged. We're in about a $10 range, and so the stock really has to get above this range it's been in for the last year to see any sort of progress. But I think I'm optimistic. The stock has it tested its 2004 highs. It's been range bound, but it hasn't really sold off much. It's held towards these highs, so eventually you should see it get up over that $58 level, which could really drive the shares higher.
And finally, you have talked previously about the S&P 500 since last summer. We have seen less and less stocks making new highs. Right. Now, how concerning is that, and how long of a period do we need to see that happen before we might be headed for a correction?
Well, a lot of it is about just the technical structure. The uptrends are still very much intact, and we're seeing a little bit of weakness today. What's important is to see the sectors that outperform and underperform for the month of January. So despite the fact the market's gone really nowhere since the end of December, we've been fairly range bound. You have seen a lot of interesting moves in technology moving to the upside, financials, and really consumer discretionary falling apart and actually underperforming due to a lot of retailing earnings and this and that. So that could be the first piece of the puzzle. Bottom line is the advanced decline still hit new highs recently. There is a lot of optimism right now, but we want to see indices move down at least under December lows to think that there's a bigger pullback, and that probably will be postponed until the second or third quarter of this year. So a lot of people are typically it's wise to respect the seasonal trends, stay invested, particularly on a big booming bull market until March of April in any given year. You start to see signs of technical deterioration, and then you can pay attention at that point. For now, any pullback at this point in the next couple of years should be a buying opportunity.